Nkonki has the professional capacity to deliver on your external and internal audit assurance requirements. Visit Nkonki.com for more.
Welcome back. Mervyn King and I are talking about ethical taxation with our guests Pete Nell and Zweli Maboza. Zweli, we've been talking about Starbucks and Google and some of the other international cases. Are there any cases in South Africa of tax payments first reputation?
Leigh, we've got a number of cases that I would actually say they are borderline in terms of doing what is right for the business and what is ethically correct. Recently we've had NWK's case, which was quite famous, which was involving a company that was raising finance, and in a process they were going to pay the bank by maize. Guess what happened? Ultimately they did not pay the bank with maize. They ended up getting a bigger deduction. Instead of getting 50 million deduction, they ended up getting something like 95 million deduction. To show that it was a borderline case, in my view, is because when you look at what happened in the tax court, the taxpayer won the case, but when it went to Bloemfontein in the Supreme Court of Appeal, the judge felt that it was a simulated case, and for that reason the taxpayer lost the case. Ethical questions were raised, obviously, by the business society. We had a similar case, for example, which is probably underway right now, but we had information in Hudeco, which was in the public domain, where again SARS felt that the company, to some extent, they were very aggressive, and the settlement that they have now is that the company must pay about 100 million every quarter, and the agreement is that they will pay that money, it's 50 million per quarter until the matter is settled by the court of law. So that was in the public domain, it's there in their website. So we still have got those kinds of cases, and you've got a situation where now SARS is putting penalties big time.
But we still don't seem to have the public pressure like on South African companies like we had in Starbucks in the UK.
Yeah, no, at the moment it's merely the pressure is coming from the revenue authorities. They are, by auditing, looking into these schemes, obtaining more information, looking at that. Yeah, so there's no pressure from the public at large to say that companies are not paying their fair share.
Before we went on air, you were talking about tax planning as a risk to the business nowadays.
Yes, I think we alluded to that when we started. In the beginning, if you look back 10, 15 years ago, tax was, as we've said, a back office affair. People were not really that concerned. What happened since is that we've had some court cases where SARS was looking at aggressive schemes, like really pointed out in that NWK case, and we've also had the Tax Administration Act. So suddenly, if you've done something wrong, or let's just say there is this dispute where you follow the letter of the law and SARS disagrees with the application, and this ends up in the court. It ends up in the public domain, and that has an impact on your share price. It has an impact on your way to do business.
But I don't think I've ever seen it in a list of material matters in the company's integrated report. So
no, but at least it's a function of also the audience that you have and the consumer that we have. I mean, if you think about the fact that the other component to that, which is also critical, is that the majority of South Africans, they are not that much literate. You are unlikely to have what you had, for example, with
like a Starbucks
case, where people are going to say, why should I pay high tax? And I've got a company here that is not paying tax. You don't have those kinds of...
And I guess at the moment, the essence of what happened at Starbucks, Google, Amazon, Apple, was that those board of directors obviously took a short-term financial view and excluded the influence of the other capitals on their business going forward.
Yes, I think they're all good examples of a lack of integrated thinking. Because on integrated thinking, you look at those 6 capitals. And I mean, one of the things you would have is an ongoing strategic communication with your key stakeholders in your social capital box. One of your key stakeholders happens to be revenue collectors all over the world, wherever you're operating. And I was interested in Pitt talking about tax policy. And my view is today that senior management should actually go and see the examiner, who the examiner is, and talk to them and say, this is our tax policy, and actually debate it with them and build up trust and confidence between the examiner and the company. Because what is happening now, companies are getting inquiries this thick from revenue, and companies are completely complying with the law and paying, but they're questioning this and questioning that, and the amount of management time that's being taken up with this, and then management settles because of the time factor. And now there's criticism of SARS in this regard, that this is just an exercise to get further money out of a legitimate company that's absolutely complying with the law and paying tax. So you get this two-sided situation, and I think an ongoing strategic communication between the two, the stakeholder and the company, builds trust and confidence between the two.
So it's almost like reputation damage to SARS, where it should be reputation damage to the company.
Well, I think it's also a function of also expertise, because what you also find in practice is that when you talk tax language, it gets complicated to a point where someone would be saying that, I mean, at the end of the day, even the directors, they have to look at what is in the best interest of the shareholders. And I agree with the point that has been made here, that sometimes if you look in the short term, you would actually look at this and say, we're going to have a tax advantage. And then sometimes you do get that tax advantage. I mean, personally, I've got experience where you would go to a company and say, look, this is not right. The tax legislation does not approve this. And someone would say, no, we've been doing this for years, you know.
Yeah.
And then that could actually come and bite you. In particular, if you look at what Pete alluded to, the Tax Administration Act, which empowers now the tax authorities to do certain things in your organization that they were not allowed to do, including to actually get to a point where they can say this director is not fit to hold a position as a director.
So things are changing. So do you think that the whole Starbucks affair, Google and all the rest, has that changed the way that multinationals organize their tax affairs, Pete?
I think it certainly has. I mean, we said the South African experience is if your name gets out that you've got a dispute with SARS, it impacts on the value of a company, but generally worldwide, and this is where if we look at all the transfer pricing cases, where you can bear me out here, it's billions of rands of tax involved, Australian cases, Canadian cases and stuff like that. The moment you have this, and I see that the risk that you communicate with the clients while I say you need that policy, but the moment you've got that, it's adverse effects on your company, and that definitely must come back to the directors to say, when we make this decision, are we going to take an aggressive stance? Are we going to do an aggressive plan? They must say the risk of that, weigh it up and say this is, and as you've rightly pointed out, Mervyn pointed out there, if I'm happy to carry that risk and like Google say, look, I've paid enough, I'm not going to pay a cent more, take that stance, but definitely it is something that you must
pretty hard work being director of a company these days.
Yeah, well, I think if you put your policy in and you say, look, I'm going to be aggressive to SARS, then you can expect to have them there every day. I mean, so
but what is fair? I mean, how much should a company pay? Because, I mean, it's entitled to organize its affairs, so that it can legally pay less tax, but on the other hand, it has an ethical and moral responsibility. What is fair?
Well, what is correct is that you pay what is due, according to the law, and Pitt spoke about the spirit of the law. This is a dangerous area because it leads to uncertainty. Yeah. And I think that you pay what is due, certainty, but you need that ongoing strategic communication with STARS, I believe, to build that trust and confidence, so that you also make decisions, and now it's the board applying its mind, it's no longer a back office situation. The board applies its mind. If I adopt this avoidance scheme, for example, first of all, SARS has got much more power to attack an avoidance scheme today than it had 10 years ago. But the question is, how will my other stakeholders view this? Will they still continue seeing me as a decent corporate citizen and paying my due, my way? Yeah. Now, if the answer to that is, and that's why I call it a business judgment call, if the answer to that is that this average citizen in South Africa is going to see this in a negative light, that's going to impact on value in the company. So it's going to impact on your ability to raise capital in the future. So rather pay the extra 100 million in tax and keep the picture, the perception of being a decent corporate
So
citizen.
you can do tax planning, but see the broader implications and
Absolutely,
consequences.
and it's got to look, and that's why integrated thinking and looking at sustained value creation. This is part of your sustained value creation.
And the longevity of the company. It's really, the Company Act in South Africa is 28%. Is there an average of the effective rate that companies actually pay?
Well, if you look at different industries, because what is happening is that you must remember within the context of the legislation, there are certain incentives that are driven by the government. For example, if you look at mining, they are going to be paying less tax in relation to a manufacturing concern, for example, because there are certain provisions within the tax legislation that are actually allowing them to get...
Because they're doing what government wants them to do.
Precisely, that's what is happening. So, but what then happens is that the confusion comes when you've got these provisions in the tax legislation and someone is taking advantage of these provisions, and now the government is now coming back, starts saying, okay, fine, why are you doing that whilst everybody is paying so much? I think that we need to have something where you can also have the tax authorities making up their minds, in particular when they deal with things like incentives. And I agree with the point that has been made by Mr. King to say, look, if you look at some of the positions, you need to say, okay, fine, this is a grey area. And if it's a grey area within the tax legislation, you are within your right to approach the tax authorities and say, can you give me a ruling on this? You know?
But Peter, I'm quite surprised that in South Africa that there is this big disparity between the effective rate, the top marginal rate for individuals, and the company rate. Why do you think that there's not more of an uproar by average Joe?
Yeah, maybe that's what's really had alluded to, that average Joe maybe doesn't pay the 40%. If we look at the numbers that was released last year, it was only about 1 million individuals that pay at the top marginal rate, and they have a taxable income of 500,000 plus per annum. So that's not big numbers. So I think 70% of our population sits below the 70,000 per year taxable income, which makes you 18% taxpayer, if at all. In fact, you don't pay tax at 70,000 rand. So maybe that's the reason why there isn't this big outcry. So people are saying, look, I'm happy with the tax I'm paying, and it's just,
the voice is too small.
The voice is too small.
Mervyn, you get the last word. What is it telling us about the feelings in the world at the moment that there is this backlash against companies paying too little tax?
Well, there are major investors around the world with trillions of dollars to invest, and the world is there waiting for them. And the world is flat, borderless and electronic today. And countries compete to attract capital. And one of the things they do to attract capital is the marginal rate corporate tax. Because America, for example's average corporate tax rate is too high at the moment. And they've got to bring it down in America because they're not attracting capital. And 28% is about, I would say, almost average in the world. I think it would be in South Africa's interest to actually drop it, to attract more capital into the country, because you actually increase and improve the economy.
Yeah, but then they'd probably push it more on individuals. We have to leave it there. Thank you so much. And thank you for joining us. We'll see you next week.
Now is the time for change. Doing business in the 21st century was proudly brought to you by Nkonki, the external and internal audit assurance providers. Log on to Nkonki.com